when I tweeted at Elon Musk, I said something and I really meant exactly what I said, right? And most people took it tongue in cheek, but I was very serious about it. I said, you want to do your shareholders $100 billion favor, convert your $20 billion balance sheet from cash to Bitcoin. And then all the, the S&P 500 companies will have to follow you, and it will become $1 trillion favor to your shareholders. And what I really meant was, you buy 10 billion in Bitcoin, you're going to double it. You can go borrow 10 billion in convertible debt. You're going to double it again. You're going to generate $40 billion of investment income on a $40 billion revenue company. Your stock is going to move north, and then everybody's going to realize, holy crap, this is safe. And here's what you're really doing. If you do that, you're basically pointing out that the price discovery has disappeared from the bond market, and the treasury strategy of holding bonds should be replaced with a treasury strategy of holding Bitcoin. And so it just takes one mega company with conviction to do it, and you can, at our size, when it was 200 billion in market cap and we leaned on it with $1 billion to 2 billion, we could drive a certain amount. But now at $1 trillion in market cap, you lean on it at about the $10 billion to $20 billion level, and you could do that now. And that's what would catapult Bitcoin to be a $5 trillion asset. And you could say, oh, this is frightening. Not really frightening. Gold is 10 trillion, right? When Bitcoin is 50 trillion, then you will say it's a lot better than gold. I mean, how much more valuable is Google Maps than Rand McNally Maps? And how much more valuable is Apple digital photos than Kodak? Right? It's very reasonable for digital gold to be 5x to 10x more valuable than gold. And I think that, Guy, it's just out there waiting for someone with conviction to do it. And but here's the general logic. If you're Tesla, what do you got to do to create $700 billion of market cap? You got to double your operating income, double your revenue. It's not easy to go from $40 billion of electric cars to $80 billion of electric cars in 1 year or 2 years. It's not. How's Apple going to do that? And so the answer is, you fix your balance sheet, right? You fix your balance sheet. As soon as you realize $100 billion of cash at Apple is a liability, burning 20 billion in shareholder value a year. As soon as you flip that to $100 billion as an asset generating 40 billion, 20 or 40 billion in shareholder value a year, what is Apple's profit a year right now? I mean, you're like, the point is, don't I double their income? Like, you take operating income and tack on investment income. Their investment income is nothing. Their operating income is everything. You cannot. And this is the paradigm shift, right? Everybody thinks they're living in a hard currency environment. They think Argentina is somewhere else and Venezuela and Zimbabwe is somewhere else, right? And that's not us. As soon as you realize that the dollar is inflating at 15% a year, if you crank in any number north of 10% for the next 4 years, and you flip your mindset, the conclusion you come to is you cannot create shareholder value or preserve shareholder value without a financial strategy that includes hard assets or strong financial assets. You might take Apple, and let's say that all of their sales are going to be limited to Venezuela, Argentina, and Zimbabwe, and then give me all your good strategy ideas and product ideas. And again, the answer is, your strategy is a losing strategy financially until you get it through your head that you have to flip your balance sheet from a liability to an asset. And the second piece of this is, you cannot sweep your cash flows as from a strong currency into a weak currency and hold it. And so ultimately, it's a very simple, straightforward approach. Apple could certainly do it. Any company that has $10 billion of firepower can do it. And Guy, I will end this thought with another tweet. It's Archimedes, 2,500 years ago. He said, if you give me a lever long enough and a fulcrum upon which to place it, I can move the world. Okay, the fulcrum is Bitcoin, $1 trillion crypto asset that nobody on earth can screw with. That's the hard point of leverage. The lever is literally the $10 billion that Apple has on their balance sheet, or $1 billion loan. Apple just borrowed, didn't they borrow like $30 billion at a blended cost of capital, like 2.5%?
My question is this: what's the existential risk here? Because I know that you think about this as well, just being the thoughtful person you are. What derails the story that we've spent the last 50 minutes talking about?
If you're intellectually honest, you have to say a black swan, an unknown can never be discounted, right? Only a fool would discount an unknown. Otherwise, I think that there isn't an existential, there isn't a risk I see in front of me. I see a lot of FUD. I see a lot of fear, uncertainty, doubt, and noise as the society accommodates this new asset. I look at Bitcoin, I look at it like compressed air or electricity or hygienic water. Or communications lines. They're all new things. And in the decade when you introduce the automobile, the airplane, the electric power, the hygienic plumbing, people push back. It's like, is it going to, I'm like, is it going to electrocute me? Is it going to burn my house down? It's noisy. It's dirty. It's, people talk about, our cars polluting. Well, horses are polluting, right? The society is going to have to adjust for a decade, and there'll be a lot of noise and pushback around that. And otherwise, I think that at $1 trillion, this is an idea whose time has come. I just can't see how anything's stopping it. I think there's just going to be some colorful sparks on the periphery.